Hey everyone, we're going to dive into a powerful LEAPS option strategy that can potentially generate $10,000 per month and put you on the path to early retirement. We're going to concentrate on the Qs for this option strategy, and the Qs tracks the NASDAQ 100 stocks. In this video, we'll break down what LEAPS options are, why we're using the Qs for this strategy. We'll go through a trade and show you step by step how it's placed, and then we'll summarize how it fits into your retirement plan. Before we get started, make sure you hit that like and subscribe button down below. Also, be sure to download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks. Let's dive into understanding LEAPS options, which are crucial to our $10,000 per month income strategy. LEAPS, or long-term equity anticipation securities, are simply option contracts with expiration dates longer than 1 year. They function just like regular options, but with a much longer time horizon, even up to 2 years. Here are the key points to understand about LEAPS options. They come in two types, calls and puts. LEAPS calls give you the right to buy the underlying security, while LEAPS puts give you the right to sell them. LEAPS offer extended time value. This means they decay more slowly than short-term options, giving your investment more time to play out. They require less capital than buying stocks outright. For example, you can gain exposure to 100 shares of stock for a fraction of the cost of actually purchasing the shares. They can also be used for various different strategies: income, speculation, and hedging against potential risk in other positions. Now that we understand LEAPS options, let's discuss why we're using the Qs. The Qs is a tech-heavy ETF fund that tracks the top 100 stocks, and they're listed on the NASDAQ stock exchange. Tech-heavy composition means it's dominated by big tech companies like Apple, Amazon, and Google. These companies have shown strong growth potential, which is crucial for our long-term strategy. The historical performance over the last decade shows an annual growth rate of greater than 15%. So no guarantee of future performance, but it's a strong indicator of the potential and what it's going to do. They're also very liquid. The Qs has assets under management exceeding $228 billion in 2024. This means you can easily enter and exit positions and not lose, on the difference between the bid and the ask spread. It's also fairly volatile, so it's great for our call side, as it can lead to higher option premiums on our short call that we place against our LEAPS if we want to make a poor man's covered call. The Qs is also diversified, so although it's tech heavy, it still offers exposure to other sectors and provides diversification within a growth-focused portfolio. Now let's dive into our strategy of creating $10,000 per month using the Qs. By the way, if you want to receive my free options guide that outlines all of the strategies as well as how to manage them, comment options down below and I'll send you the link. All right, the capital requirement. To generate $10,000 monthly, we'll need a capital base. At this stage, we don't know exactly what it is, so we'll calculate what it takes to buy or purchase one LEAPS option contract first, and then we'll calculate at the end exactly what's needed. Step 2, we want to select the LEAPS option. We'll buy a deep in the money LEAPS call option in the Qs at a delta of around 0.65 or higher. These options will behave similarly to owning the Q shares outright, but with much less capital outlay. Step 3 is calculating the number of contracts. Again, we'll do this as we move down and you see the example. And step 4, we're going to implement the poor man's covered call strategy. So in order to do this, we will sell a call option slightly out of the money, 4 to 5% above the current Q's price. And then we will calculate the monthly income to reach our $10,000 monthly goal. And then finally, trade management for risk mitigation. We're going to want to reassess and stay on top of our trade every month. And in order to do this, if the price of the Qs exceeds the short strike, we can close and roll up within the same month if we're between 10 and 45 DTE, days to expiration. If the price of the Qs lowers significantly, we can close out the call side or roll down the short call option and collect additional monthly premium. Once we get down to the 10 to 15 days to expiration, we can roll out to the next monthly short call option and collect more option premium. Once the LEAPS option is inside of the 1 year mark or 365 days to expiration, we can sell the close and then buy another LEAPS option 18 months to a year out. All right, guys, let's go to the Tasty Trade option trading platform. I use Tasty Trade as well as Moomoo. There's links down below, and there's some benefits if you use my link, so check that out. If we punch in Qs, QQQ in the upper left right here, we're on the trade page, and we're going to go, these are the option chains. We're going to click on the June 18th, 2026. So that's 585 days to expiration. Again, we wanted to go out between 1 year and 2 years. So we'll open up that chain, and then you can see I clicked on the 470. This is a deep in the money call option. We click on the buy. So we've got calls on the left, puts on the right. We click on the buy or the ask, and we sell for $99.70. However, we're going to go mid price, and we'll get filled somewhere around the mid price. But since we are going to use round numbers in this example, this is basically $98. But so we would probably get filled somewhere around $98. And that is really, you multiply it times 100 because each option contract controls 100 shares. So it's basically $9,800, $9,800 for one LEAPS option contract. And this is the 470 strike, 65 delta. So remember that. Now we're going to close this out. And at the same time, we're going to, well, actually, let's take a look at curve mode first. Now, we're at, the current price is 514. If we increase in value 12% annually, it brings us up to 575. It's basically 514 times 1.12. And it brings us up to this 575. So basically our option contract is $9,800. This is all profit because it increases through the year. So we've got $9,800 in profit that we've made throughout the year. And we can make more as the option contract moves up. And you'll see in the table mode, this as we move up to that 575 range, the option pricing changes. So it's a little bit difficult to understand. I've got to have a clear way of doing it, but hey, I've done this and it works. Let's go to the December 2024, 40 days to expiration. Let's open that up. Now, if we, what we're going to do now is sell a call against it, against our LEAPS option contract. So we want to go out of the money, and we want to go right here around the 30 delta. You can see 0.31 under the delta. And instead of buying the call, now we're going to sell it. So we are going to sell the 530 call option. So we click right here on the sell, and you can see $5.91. So this is $591, basically 600 bucks that will be deposited as we hit review and send and place this trade right into our account. So this is a monthly income that we can collect every month by selling this option contract against our LEAPS. So we not only make money on the LEAPS option, but we make money on this. We click on that, and you can see the price drops down to $91.83, basically $9,200. We hit review and send and place the trade. All right, guys, now let's break down some numbers. Okay, what is the cost? The Qs are trading at $514 per share, as we saw. The June 2026 LEAPS 470 strike call option cost about $9,800. We sell the 30 delta 40 days to expiration call, so the 530 strike in December, and we sell that against the LEAPS and collect $600. Now, out of that, we're going to keep around $400 per month because we're going to roll at 10 to 15 days to expiration. This brings the cost of each LEAPS option contract down from $9,800 minus the $400 collected, actually it's $600, to $9,200. Now the monthly income from selling the call is $600 per month. And we talked about we'll probably keep around $400 per month prior to rolling. So over 12 months, that's $4,800 per year. The monthly income from the LEAPS at a 12% average return over 1 year is, well, it's $514 today. That would put the price at $575 a year from now. And remember, we paid $9,800, and now it's basically worth nothing because it moved up 12%, and we saw on the curve mode that that's basically the break even. So the way to look at that is the option value then increased by $9,800 in 1 year, because we're going to be able to, we bought that option, we're going to be able to sell it back, and that will give us that profit in 1 year. So that comes out to roughly $800 per month income from the LEAPS option over a year's period. So therefore, the total monthly income from both the LEAPS and the call sold against it is the $800 per month from the LEAPS plus the $400 per month income from the call sold. So it's $1,200 per month. Now, let's look at the different scenarios. So for one tranche, in other words, one LEAPS option that we buy and then sell one call against it, we do that for the $9,800 cost for the LEAPS minus the $400 short call premium, $9,400. You could basically say $9,200, but we're keeping $400 of the $600. So I'm just going to put it at $9,400 to be conservative. The monthly income we talked about as being $1,200 per month, and the annual income then is $1,200 per month times 12 months, or $14,400 per year. So the return on investment is basically $9,400 or $9,200 divided by the income per year, $14,400. It's 153% return. And hey, that's not too shabby. Now, if we do two tranches, we just double that, $28,800 per year. The return is going to be the same, 153%. But with two tranches, we make $2,400 a month instead of the $1,200 per month. 5 tranches, $6,000 per month. 8 tranches, $9,600 per month. So now we're getting to the point where, hey, we're coming up on our 10K per month. And in order to do this, the amount of money that we need is basically the cost right here. $9,800 times 8 contracts minus the $400 in income. So it's $9,400 times 8 contracts, $75,000. So basically what we're looking at, this answers our question, but hey, we need around $80,000 in order to generate 10K per month utilizing this strategy. If all works out, if the Qs increases 12% per year and everything goes as planned. But hey, I've done this in other stocks, haven't done it in the Qs yet, but this is what I'm looking to do. And I think it's a great strategy to utilize the Qs. 10 tranches, again, $144,000 per year. And this is for under, $100,000, $94,000 investment. So just one strategy that can complement your other strategies that you're using in your retirement portfolio. Now that we've covered the LEAPS option strategy for generating monthly income, let's discuss how it fits into your retirement portfolio. And remember, retirement is not just about income, it's about preserving your wealth. So hey guys, just to summarize, here's how the LEAPS option strategy can contribute to your early retirement plan. Compounding effects. By reinvesting a portion of your $10,000 monthly income, you can accelerate your wealth accumulation. Portfolio diversification. While our strategy focuses on the Qs, it's crucial to use other strategies as well. Bonds, real estate, international stocks. The tax considerations. LEAPS options are typically taxed as short-term capital gains when held for less than a year. Always consult with your tax consultant. Risk management. As you approach your target retirement age, gradually reduce your exposure to riskier assets. At least that's what I'm doing. This might mean scaling back your LEAPS strategy, increasing allocation to more conservative investments. However, at the same time, it's a great way to increase your monthly income. Flexibility. One of the biggest advantages of this strategy is its flexibility. You can adjust your income generation based on the market conditions and your needs. In bull markets, you might generate more than $10,000 per month. By integrating this LEAPS option strategy into your long-term retirement plan, you are well on your way to financial independence. Last thing in closing, guys, hey, I don't recommend that you put this trade in the Qs when the Qs are at all-time highs. You want to wait for a pullback. That's what I'm going to do. Once there's a pullback, then I'm going to implement this strategy. All right, so thanks for watching the video. I appreciate it. Be sure and hit like and subscribe down below. Download the free options workshop. Drop a comment. Let me know what you're trading, what you think about trading the Qs and this strategy. I'll see you in the next video.